And Kenya's public debt has grown by 1 trillion, and to help us see what is going on and where this country is headed, we have a panel of experts with us tonight. Kariithi.
Thank you very much, Michael. Of course, concern quickly growing over what appears to be a borrowing spree by the government. Some people saying it is a careless move by the government. Of course, let's start with the syndicated loan, 61 billion shillings. First, to get our audience to understand, and I have not introduced you, gentlemen. My sincere apologies. We've got in studio Kariithi, Murimi, CEO and team leader, the Value Directors Limited. Thank you so much for being on the Business Center tonight. And Shiv, Arora from Cytonn Investments, Head of Private Equity Real Estate. Gentlemen, thank you so much for joining us, and my apologies for not doing the introduction earlier. All right, the government just obtained a 61 billion shilling syndicated loan. For the benefit of our audience, what is a syndicated loan?
Okay. I think when you're looking at a syndicated loan, the reason why they call it syndicated is that it came from a variety of lenders, and in this case they disclosed it was Citibank and Standard Chartered that helped arrange the loan for them, which was obviously borrowed in the foreign markets and a dollar-denominated debt, which brings about to be a syndicated project. All right.
Kariithi, by turning to commercial banks for lending, is the government confirming that it is cash-strapped, even though, you know, the CS of Treasury the other day said that the government is not experiencing liquidity problems where cash is involved?
I think it's important first to put the whole thing into perspective. The loan that we are calling syndicated loan was actually in the budget policy paper. So it's not like they woke up and started getting it. The bid they have so far is $600 million, which was meant to be part of stabilizing the exchange rate. So it's an injection of money with a foreign denominated aspect. The current interest rate on that loan is 5.7%, but of course realizing it's on a foreign dollar amount. So if the exchange rate moves, of course the interest rate can go up. And what Kenyans need to know, by the government bringing in the $61 billion, they were able to refuse 70 billion of TB rates last week. And that's how the interest rate started coming down. So that we need to look at it in context rather than on a one-on-one basis. Now, coming back to the other question, the borrowing is part of the larger policy of government to fund the Vision 2030 projects. So we are in what we call an expansionary part of the phase of government spending, where it's borrowing more because there are longer term projects to be implemented.
But is it a wise decision, do you think, Shiv, for the government to take the loan at this time, knowing very well the debt situation and the rest of the country up in arms saying we are over borrowing?
We have to again take a step back and first understand context as to where we are looking from. If we look at about 3 weeks ago in the domestic market, the Kenyan government was actually having net repayments back. It's only up until 3 weeks ago that they actually became a net borrower in the domestic market. So yes, there have been instances where they have borrowed quite a bit in the domestic market, and they've borrowed aggressively in order to finance their budget, which has obviously caused rates to go up. However, when you look at the requirement for foreign obligation, which is about 350 billion shillings from the budget, which was correctly pointed out, I don't necessarily, and at Cytonn we also share this view, it's not really the right time for them to go out and really take on this foreign financing, given the stability of the economy at the moment, and especially looking at the weakness of the shilling when it comes to servicing that debt.
What are your thoughts on the same? Was it the right time?
I think timing is a debatable aspect, because economists unfortunately have a lot of why and what. If you look at the bigger picture is that you're funding a deficit at the end of the day. So you either go foreign or you go local. If you remain local, the interest rates continue going up. So from a macroeconomic assumption, what you are doing as a government is challenging your mind and saying, do I bring something slightly lower to stabilize the interest rates, or do I allow the local market to continue participating in treasury bills, because the gap of funding doesn't disappear? So it's more or less asking which do you go for? The TB current one, which is the local, or do you go for another foreign one? And as I say, the actual figure was in the budget policy. So those of us who know about the budget policy, those of us who had read, those of us who advised other people, we were not surprised that this one was happening.
All right.
But we also need to be clear in our mind that what government is basically doing is balancing three things. One, you need foreign exchange to be able to repay some of the substantive capital investments you are doing. So if you are importing, you of course need to close the gap on what you call your foreign currency. Now, that gap of foreign currency, you either borrow in foreign or you do the reverse, which is you make the shilling go further through the interest rate function. And the government is choosing one of the two, but they can't choose none.
All right. And of course, we'll come to the Eurobond, which you have alluded to just now. I'm wondering about the payment period, which is capped at 2 years for this particular syndicated loan. And now there are fears over whether the government will actually be able to pay it back, you know, within the 2 years. And given the presentation that Michael Njenga read to us earlier, within 3 years, the government has taken on 1 trillion shillings in debt. What are your thoughts about the payment period?
Again, I think it's a balancing act between where the government is on a domestic front and as well as where they are on a foreign front. If you look at where they're borrowing domestically, majority of their local domestic has been skewed towards T-bills, so 91-day and 182-day paper. So if you actually analyze their repayment, it's all falling back into this fiscal year. If they couldn't have obviously come out and taken money for a shorter period from the international markets, what's most important is that from this $600 million and this 60 billion Kenya shillings, what is it exactly being used for? I think there needs to be clarity in terms of the exact use of proceeds from the syndicated loan, because if we are to repay it back within 2 years, it raises questions as to whether it can actually be applied towards development expenditure projects.
Let's talk about the Eurobond, and of course it is perhaps the hottest topic now in both the economic and the political spheres. If indeed it was meant to spur economic growth, you know, lower the interest rates, perhaps even stabilize the shilling, why are we going through what we are going through as an economy?
There are two things which never happened. The growth assumptions on the GDP have come down from the original expected 7 to 6%. What that means is that your projected inflows in whichever export you had in mind have not materialized. The second one is what you call excess expenditure. The original assumption was that the streamlining of the two levels of government will give way to reducing what you call duplicated wages. That bit has yet to happen. In other words, they are still negotiating about it. In the meantime, of course, you are paying that particular expenditure. So the expenditure part of government has gone slightly higher than originally expected. That going up is basically what we are calling a deficit. Maybe for the purpose of our viewers, what they need to understand is just one thing. When you hear the minister read a budget for you, he gives you two figures. He says, this is my expected tax revenue, which I will collect. He also gives you, this is what I will spend. If any of the two numbers doesn't materialize the way it is projected, you create what we call a deficit. Borrowing is basically a deficit financing. So what you are financing is all those companies which have reported losses. Those projected taxes in those companies are not there. But the actual expenditure in terms of salary or whatever name you want to call it is still continuing. So you have to bring that in and remove it. The other thing Kenyans need to know is that when we are reading the 1 trillion increase, one portion of that figure is actually known. It is the SGR railway line, which is 327. So you can say 30% of the 1 trillion we are discussing as an increase is a specific item. Which item has been sitting in the Kenyan plans for the last 7 years. Because it's also important for us to give Kenyans the truth that some of the projects that you seem to be hearing being done in the Jubilee government were actually actualized in the Vision 2030 during the Kibaki system. It's only the timing side which is coming now. Now, of course, in terms of funding, you can raise the question whether you go to borrow when rates look high, when exchange rate looks high. Those are choices now which a system of government has to make a decision. The last part of it is, of course, our exports have drastically gone down and our tourism earnings. And the decrease in tourism, the decrease in exports has a direct correlation with reduced foreign exchange. So part of what we are saying, can you have a Eurobond, can you have syndicated loan, is to fill the gap that tourism directly has contributed. Now all Kenyans know where tourism numbers are coming from, the insecurity and all those stories. So in short, what I'm saying is, assuming you are the president and you are running the economy and you have a fixed expenditure line in terms of salary, wages, all those things, what else do you do? And those are the decisions that one has to make.
And of course the government's position is that, some of the heavy infrastructure investments which Kariithi has just mentioned now will yield enough revenue to pay the debt in future. And I was just reading that Kenya requires at least 5.7 trillion shillings to fund all the mega projects. Can we sustainably borrow as a government?
I think just to take a step back is to first understand where the budget was brought up from. It was brought on growth assumptions of 7%, which we're obviously seeing now are not going to be met. Our view is anywhere between 4.5% and 5%. However, then it's to then take a step back and say, so what are we going to do? Is it going to come from tax collection? But we've seen tax collection has come below target as well. They missed their first quarter of the fiscal year tax collection as well. Obviously not by a significant margin, but by 8%. And you have your fixed line on expenditure, which is definitely always going to be there. However, that line always keeps increasing, and the amount of tax collection always keeps decreasing. So when you look at the budget deficit over the year, you're always going to be in a point where it keeps expanding and keeps expanding. And that leads to us going and borrowing more and more in the market. It brings it back to short-term borrowing, which the government has currently resorted to. That are they going to keep borrowing in the short term because the repayments fall within the same fiscal year? However, given this current interest rate environment, it becomes very difficult to actually go out and lock in expensive money for the government for a period of 5 years, because that would be really detrimental towards their ability to repay their loans. I think what really needs to happen is we need to take a step back and say, yes, we do have mega infrastructural projects, LAPSET corridor, standard gauge railway, expansion of our roads, and they're all necessary to help Kenya achieve Vision 2030 and put us on a path of double-digit GDP growth. But can it not be done in phases? Can we not take a step back and say what really needs to be done now, and can we do that now and almost live within our means? With a debt to GDP drastically approaching 60% very quickly, sooner rather than later, if the economy was a stock, you'd be left with 40 shillings. So
priorities, and sorry to cut you off, but we really need to wind up, and I need to ask, top of mind for Kenyans right now is, how is this affecting me? And of course interest rates, from the banks. There seems to be some positive news over the last week or so. How do you see that turning out? Do we expect interest rates to come down as we wind up?
They may come down, but not in the margins that people have in mind. 1 to 2% is possible. But if government puts its foot down on what you call unnecessary expenditure, it's possible to indirectly influence the interest rates, because the government's ability to borrow is also triggered by its expenditure cycle. So if the government becomes specific, like what our teachers said, austerity measures, no going to Mombasa as a CS on first class, you go economy, those type of things, reducing some of those foreign travels, reducing the delegations that are going out there, and then remanaging. The priority risk in terms of going forward is not a complicated risk. You can remanage it. What you cannot change too much is what you have already contracted. Like you're doing the geothermal, you're doing the standard gauge. These are contracted projects. But Kenyans also need to respect one bigger thing, because we are also not bringing the whole picture out. Part of the heavy expenditure last year in the 1 trillion was to modernize the port of Mombasa. The cost of goods in terms of what you call the direct cost to the manufacturer has actually gone down significantly, because the days of moving goods from Mombasa now has drastically improved because of the efficiency in the port. So it's not like we are just spending and not gaining. There is a gain, and if you hear the noise out there, you are unlikely to hear the KEPSAs, the Kenya Association Manufacturers making the noise. But for the ordinary Kenyan, of course, he is entitled to what they are asking. But we would also want to help the ordinary Kenyan to understand part of the noise they are making is not for them. Very few Kenyans have mortgages. The actual number of Kenyans with mortgages is less than 30,000.
Yes.
So when you're doing some of the fiscal decisions as a government, you look at the bigger number. So that's why once in a while you appear like you are leaving the interest rates, but you are sensitive as a government, this is for 30,000 Kenyans. But the bigger Kenyans need a reduced exchange rate because it is the one to interfere with wheat pricing, those type of things.
All right, we have to end it there. Of course, this conversation cannot end within the time that we have been assigned tonight, but I'd like to thank you so much for shedding light on this issue. Shiv Arora, Head of Private Equity Real Estate at Cytonn Investments, and Kariithi Murimi, CEO, Team Leader, Value Directors Limited. Thank you so much for being on the Business Center tonight. Well, we're taking a very short